Hey guys, good afternoon, everybody. It is Tuesday, April 19th. It's 2:01 right now. I'm going to go ahead and set up this room real quick and we'll get started with our mentoring session for the day. So everything all set up right here. Looks good. Right there. Some last touches over here and we should be good to go. All right, so let me get this link sent out to you guys here in the premium. And then we will get started shortly. All right, cool. Looks like people are making their way in. So I'll give it a few more minutes for people to join and then we'll get started. All right, guys. Good afternoon, guys. It is Tuesday, April 19th, 2:03 p.m. We're scheduled to start at 2 p.m. So I'll give it a few minutes for people to join. And then we'll get started. I have a couple questions here to start off. I got one question from, let's see that. One question from, or a couple questions actually. I got a couple questions from Alexander. He wants me to cover all the indicators. So if that's a question you guys have, I'll be going over every K2 indicator to just explain what everything does. Another question from Alexander is the best way to enter market price, which is going to be the DOM, but I'll try to explain that as well. We have another question here from Solo. I think Solo's here as well. Solo kind of wants me to cover, I guess it's like a little variation to like the 10-minute V3. He kind of made a couple different changes here, which I'll go over it, but it's not going to be a K2 strategy, guys, right? So I just want to give you guys a heads up. When I go over the strategy, I'll let you guys know that it's not a K2 strategy. It's a spin-off of a K2 strategy, basically the variation on the 10-minute, but Solo kind of made it to his own, like for his own liking. So we'll go over that as well. And that's going to be the third question. So just a refresher, first question I'm going to go over is Alexander. He's going to be asked, well, he asked for me to cover all of the K2 indicators. So I'll be doing that. His second question is to cover, how to enter a market price or enter a trade at market price the best way. I'm not going to be able to show you here because I can't drag my MT4 to the screen, but I'll try to explain as best as possible. And then we'll be going over Solo's question here, where he wants me to basically look over his little twist on the variation strategy on the 10-minute. So other than that, hey, Solo. Yeah, morning for you over there in New Zealand. It's I think you're New Zealand, right? It's afternoon for us here. I keep forgetting you're like opposite of us. Hey, Marlon. Good afternoon. Damn, 9 a.m. over there. It's like opposite time. Hey, Purity. Victor said on the breakout, look like on the breakout, look at the charts. So I'll get to your question next, Victor. So, all right, so we got one question. We got two questions from Alexander. I'm going to cover the indicators, entering trades at market price. I'm going to go over Solo's question over here, basically his little twist on the variation. And then we have a question after that from Victor, which is regarding the breakout. So, hey, Rami, how's it going? Looks like there's majority of people in here already. So I'll just get started with the first part because this will probably take some time for me to cover the indicators. What I'm going to do here is I'm going to I don't really want to mess up my chart here. Let me just open a, or I'll go to like a chart here that I don't really use. So I'll just go here. I'll go over to US 30, right? I mean, it doesn't really matter what time frame we're using, but I'll go over every indicator one by one. So let me just take everything off the chart first, and then I will add them in order over here. Let me see if Alexander's here. So Alexander's not here. I'll just cover it and then he will watch it later. I think he's at work. So let me just get this the indicators up right here. I'm basically going to add all the K2 indicators. So I'll add all of these here: the K2 high low, K2 pivots, K2 sessions, K2 SR, K2 SRV2, the trend meter, and the proprietary trading system. So Purity, I know you had an issue, you and Janae, regarding the momentum indicator, right? I know the indicator here is named differently. It's actually called KT Trade's proprietary trading system. This is the main indicator. It's just called the proprietary trading system because everything is based off, basically all the strategies are based off this indicator here. So it says that there, but when you actually put on your chart, it says K2 momentum. We just changed the name. This is the actual name for the indicator, but we changed it to K2 momentum because that's what everyone referred to it as. And it just made things a lot easier for people to understand, what indicator was what. So I'm going to go down this list here and I'll go down each indicator one by one to explain. I think this will help with your questions too, Purity, you and Janae, because I know you guys were a bit confused as to, what indicators are used, how are they used, what they're meant for. I know that the videos don't explain some of the new ones because they're somewhat brand new. They've only been around for a couple months and they're still in their testing phase, but the new videos are coming up shortly to explain a few of the new ones, which are basically just the high, low, and the sessions. But they're pretty self-explanatory. So I'll go over that right now, and then we will start off with that question first. So just to remind you guys, this first part of the mentoring session is going to be Alexander's question asking to cover all of the K2 indicators. I'll be covering them one by one to explain how each of them work and what they do. So let's get started with that. So the first indicator right here is going to be the K2 high-low indicator. I'm going to turn it on right here. Basically, what this indicator does is it identifies the high lows on the chart. As you can see right here, we have a high, low, high, low, high, low, right? This is basically where price swings high and swings low. So like, for example, over here, price swings up, then it swings down, then it swings up, then it swings down, then it swings up, then it swings down, etc. So it's pretty self-explanatory as to like what this indicator does. It just identifies where the high lows are. When you take that off, you don't have anything on the chart. You can kind of eyeball it to see where the high lows are because you can kind of see like this is a high, this is a low, this is a high, this is a low. But this indicator just does everything for you, so you don't have to guess. Because what happens is I see a lot of people misinterpret the high lows, right? So for example, I could see that this is a high, this is a low, this is a high, and this is a low, right? What happens with a lot of people here is they'll think this is the high, and then they'll think this is the low, or they'll think this is the high, and they'll pretty much skip over this high and this low right here, right? And I see that happen a lot. There's no problem with identifying it that way. It's just if you want to be very accurate and very precise, you want to identify every high low, right? And that's what this indicator does. It pretty much takes out the guesswork. So instead of kind of guessing where the high lows are, you just turn this on and you already know where the high lows are sitting. This will also help with identifying liquidity because typically people place their stop losses at the previous swing highs and swing lows, depending on which direction that they are trading. So hopefully that makes sense for the high lows. Pretty self-explanatory, nothing too difficult there. Where it becomes more of a challenge is when you use these to identify certain things in the market, right? So basically this is what the indicator is used for, to identify high lows, but these high lows are used to identify other things like liquidity, where people place their stop losses, et cetera, stuff like that. That's where we can go deeper into it. But for right now, I'm just going to go over the specific indicators so that you guys can understand what each indicator does and their basic uses. Obviously, there's more complex uses for them, but for right now, I'm just going to keep it as basic as possible so that everyone can get this stuff down and there's no confusion as to like what indicator does what. So that's it with that indicator right there. The next indicator is going to be the K2 pivots indicator. So the K2 pivots indicator right here basically identify where price is likely to pivot, or in other words, reject. So like, for example, here you can see price goes below the pivots over here, and you can see where price kind of bounces. Let me see if I can find an example here. This is a pretty good example right here. So as you can see, price pushes above it and price will come down. Like for example, right here, price comes down and then it bounces off the pivot, right? So that's why they're called K2 pivots, because price will come up, it'll come down, and it'll pivot right off the pivot, right? It's self-explanatory. That's why I try to keep the names very simple so that you guys can kind of tie in. If you just read the name high-low, it identifies a high-low. K2 pivots, it identifies pivots, right? Because price will come up, it'll come back down, and then it'll pivot right off the K2 pivot. Again, price pushes up higher, price comes back down. What happens right here? It bounces off the pivot, right? If you guys aren't familiar with what a pivot is, it's basically just a bounce off a certain point. So like price will be moving one direction, and then if it bounces right off it, it's pivoting from that point, right? So try to keep it as simple as possible so that you guys can understand. It's pretty self-explanatory. That's one way of using this indicator. As you can see, price pushes around again. It pivots off the next level right there. And the way that this indicator identifies the strength of the pivot is by the color. So green is going to be level 1, yellow is going to be level 2, orange is going to be level 3, and red is going to be level 4. So as you can see right here, when price hits the green pivot, it's a small rejection, right? It's nothing huge. It just bounces off. As you can see right here, when price comes down and hits the yellow pivot right there, right? Hits the yellow pivot, it bounces off even harder. It shoots up even higher. Again, right here, price comes a bit lower, or it doesn't actually test the orange one. It does test it, but it doesn't bounce off. So you can see right here, whenever it bounces off the yellow, it pretty much skyrockets heavily. So that's one way of using it to identify where price is pivoting from. Another way to use the pivots is to identify the trend. So again, right here, we'll use the same example. When price is above the pivots, it's trending up, right? The more that the pivots are spread out, the stronger the trend. When the pivots are kind of tight like this, it's not a strong trend, right? You'll see price kind of consolidating right here. Same situation right here, price breaks below, pushes below the pivots, price is now trending down. And you can see the pivots here are getting wide, so the trend gets stronger. You know, you can do this by hand if you want. Like for example, if you were to just draw your own trend lines, which you could do, I mean, it's perfectly fine. You guys can do whatever you guys feel comfortable with. You can do that, right? You can draw your trend lines, but who wants to do all this work, right? You just draw on the pivots, or let me put that back up. Instead of drawing a trend line like that, you just draw on the pivots. You already know price is trending up because you have the pivots right here. So basically, I created all these indicators to make things easier on everybody, right? I try to make things as easy as possible. I feel like a lot of people want to overcomplicate trading, which is really unnecessary. You know, I've pretty much learned as much as you can learn on the internet regarding trading. So basically what these indicators do is it makes things a lot simpler for you. Instead of having to draw these trend lines, instead of having to draw these high lows, you know, you want to be on point. So you just have them set up already. So that's how we're able to trade very efficiently. We're able to get into trades really quickly. We don't really have to think very much, right? Because the indicators do all the work for you. A lot of people don't like indicators, but the reason why a lot of people don't like indicators is because they don't know how to use them, or they're using something that everybody else is using, right? So I create my own indicators because I'm looking for specific things in the market. I don't care about patterns. I don't care about volatility. I don't care about RSI. I don't care about none of that stuff. I don't use the RSI. I don't use any other indicators. All the indicators I use are K2 indicators because they're used for a specific reason. So that's pretty much the explanation for the high-low, the pivots. The next indicator is going to be the K2 sessions indicator. With this indicator right here, all it does is it marks up the previous session high lows. So there's 3 different sessions or there's technically 4 sessions, but I don't count the Aussie session because it overlaps with Asia, so it's not really all that necessary. It's kind of hard to see here on the 1 minute, so I'll go like on the 10 to see the different sessions, right? So this indicator is just as self-explanatory as a high, low, and the pivots. Basically, what this indicator does is it identifies where the previous session high lows are. So for example, right here, the New York high is this green line right here. The other green line is going to be the New York low. So from the previous day, this is going to be the New York high, and this is going to be the New York low. Same with the other time frames or the sessions. We have the London high right here from the previous day, which is going to be right there. And then we have the London low from the previous day, which is going to be right here as well. Other than that, I mean, it pretty much explains this indicator for the most part. It just identifies the previous session high lows. One thing that you guys can take away from this is that if you guys know how I trade, I don't trade anywhere near these sessions because a lot of people ignore the previous session high lows, but they're actually really important. You can see right here where price rejects from. And you can see where price kind of gets manipulated, right? Fake out, then drops. This is why I don't trade around the sessions. So I use this more so as a safeguard from getting into bad trades rather than entering trades specifically. So this can be used for multiple things, but for the most part, I just use it to identify where manipulation may be happening. Because you can see right here, whenever price reaches these sessions, price becomes manipulated, right? So price kind of pushes up a little bit. People are expecting it to push up higher. However, it doesn't. It just goes sideways for a bit, for a while actually, and then it finally does push up. But at that point, people are getting tricked right here as well. So people think price is going to go up. Price gets to this point, people think price is going to go down, but realistically, it's just continuing up higher. So that's what the K2 sessions indicator does more specifically. Let's see, question from Purity. Purity said, so pivot and resistance is the same. No, it's not. They're totally different, Purity. Support and resistance or support and resistance pivots are pivots. I mean, they're two different things. I'm trying to figure out a way to explain it to you. I feel like a lot of people get those things confused, right? They're totally different things. Support and resistance are like areas where price is tested more than twice. Like, and I'm getting to those indicators right here, Purity. So I'll get to that point right now, and this will help you understand it a lot better. The pivots are points where price is just, it's pivoting at any point. This doesn't, just because price comes up to this point doesn't make it a resistance, right? There's no resistance right here. Resistance could be somewhere over here, right? And support could be somewhere down here. These little points where price is pivoting from doesn't make it a resistance because price was never established as a resistance. This is just a point where price pivots from. So a pivot is just where price bounces off. It doesn't necessarily make it a resistance. And same with the opposite direction. Like there's points where price is bouncing off the lower end. It doesn't make it a support. So try not to get those two kind of mixed up. I feel like everyone kind of thinks that pivots and support and resistance are the same thing because they just bounce off, but just because they bounce off don't make them a support resistance, right? Because there's multiple areas where price will bounce off, right? Like for example, here, you're not going to call all of these right here. You're not going to call like all of these right here support, right? Just because it bounces off these lower points, this doesn't make it a support, right? In order for it to be a support, it needs to be tested multiple times. So like this right here could be considered a support because it's been tested X amount of times, a lot of times right there. But something like this right here, this would not be considered a support because it's only been tested like once, right? And then when price actually gets down to it, it breaks right through it. So try not to confuse the two. I know a lot of people try to simplify things and there's a lot of confusion as to like what's a support, what's a resistance versus what's a pivot versus what's a high or a low, right? They're all different things. That's why they're named something different. There's separate indicators for them. There's a K2 pivots indicator and there's an SR indicator, which stands for support and resistance. And we're going to get to that right now. So let me go and hide this real quick. The next indicator we're going to look at is going to be the K2SR version 1. What this indicator does is it just identifies where the most recent support and resistance are. So as you can see right here, price is going sideways, right? And as it goes sideways, you can see that this area right here is a resistance. And this area right here is a support, because price just keeps bouncing around those areas. The way that this indicator works is it just identifies where is the closest support and resistance. So if I go back over here, let's go back a little farther back. The reason I created this indicator was to identify where the support and resistance is and for it to adjust automatically. Because the thing is, support and resistance is always adjusting. So back to your question right here, Purity, you can see that the pivots, there's pivots all around, right? There's pivots that are around this area, but it doesn't line up with support and resistance. The resistance is up here and the support is down here. Even though price is pivoting around these areas, these are not support and resistance. These are completely different. So this is pivots right here because price bounces around and it pivots off it while the support is actually down here and the support and the resistance is up here. As price continues to move along, you'll see that the support and resistance will automatically adjust, right? Previously, the support was down here. Now it's automatically adjusted to this point. So as price continues to move along, instead of having to draw the support and resistance yourself, it just does it for you, right? The support was here before, now it's over here. And as price continues to move along, see how price broke below here? The support's no longer there, right? It goes back to the old support, which is down here. And then it'll just keep moving along. Support drop down here. And this indicator just helps you identify where the support is. And there's a resistance right there. You can see the resistance kind of adjusted a little bit. You can see that this support basically turned into a resistance, but a little lower down here. So that's what this indicator is used for. And you can see right here, as price continues to move along, the support and resistance will adjust with it. And it's all automatic. So you don't have to go and adjust support and resistance whenever price moves along. So if you're using some sort of support and resistance strategy, like the K2SR strategy, then this will help you identify where the support and resistance is without actually having to draw it. Because what happens is I see a lot of people look for support and resistance and they'll be looking at the chart for like hours, right? They'll be like, okay, they'll be like, all right, so this is now the support and I guess this is the resistance up here, right? And then what I see people do is they'll be like confused because the resistance will move down here, but they don't even know that resistance is there because they didn't automatically adjust it, right? Because they don't have the indicator. That's why this indicator takes out all the guesswork. So you don't have to go guess where support and resistance is sitting. You just turn it on and then it will follow price as it continues to move along. So this is the first version of the SR. Let me turn off the pivots here. This is the first version of the SR. And you can see how it adjusts on the chart. This is the first version. The second version that I introduced was because people were wanting the support and resistance to stay on the chart, right? So for example, here you just have the closest support and resistance. What happened was people were asking like, hey, like what if price moves and I want to keep this support up here, right? Like say, for example, you have the resistance set up right there and you have the support right there, right? And then price moves. So that now that price has moved, the support has moved up, people wanted this to stay down here. So what I created next was I created a support resistance indicator, basically the same indicator, but this time it keeps the support resistance on the chart for you. So I'm going to go back to where we started earlier over here. I'm going to go and turn this one off and I'll turn on the version 2. This is the version 2 right here. This is the default length. It's just kind of short. I tend to just put it to like 500. So it goes across the entire chart. And now instead of having just the closest support resistance, you're going to have pretty much all the support resistance that's nearby, which makes things a lot easier. So like, for example, here's the old resistance right here and the old support. And then as price continues to move along, the older support resistance will disappear and the new support resistance will be created. And you can see how useful this is, because if you guys can see where price bounces from, it goes around and bounces from the support and resistance, right? Because support and resistance is always changing. It's a little more messy here on the 1 minute. If you go somewhere like on the 10 minute, or even higher, if you go like on the 30 minute or something like that, you can see that it's a lot easier to follow. So like, for example, here it's the same, it's the same thing. It does the same thing as the V1, where it will continue to, I'll figure out how to have this. Okay, there we go. So it's the same thing as the V1 over here. But instead of just having one level of support resistance, it's going to have multiple ones. So like right here, we have the old support. The price is cutting into the old support. Now there's new support right there. So if you guys follow, you can see where price is going to bounce from. Like price pushes down a little bit, it pushes up, creates a new resistance right there. You can identify if like price comes to this area, it might bounce up, or it might break above and continue pushing up higher. So right there, you can see price came to that point, and then it bounced right off it, right? So depending on what strategy you guys are applying, you can use this to your advantage, especially if you have a support and resistance type strategy that you like to apply. This will just automatically plot the support and resistance on the chart for you. So as price continues to move along, you guys can see that new support and resistance is getting created as price moves further. And then you can see that these old ones over here become deleted. So like you can see that there was one over here, now it's gone. These all deleted because price is so far away from it. Whenever price moves forward, it's just going to delete the old ones, and it's going to create the more new relevant ones, because you don't really care what's happening above here because price is way down here, right? So it just wouldn't make sense for you to like care what's going on over here. You care what's going on down here. And price just continues to move along further, comes back into that area, and then you can see the same resistance right here was tested, and then it came right back down. So that's an explanation of the K2SR version 2. It's basically the version 1. It just keeps more support resistance on the chart so that you guys can see, the bigger view of things. Next indicator here is going to be the K2 momentum indicator. This is going to be the most important indicator. So, you guys know exactly what this indicator does. It identifies momentum swings in the market, right? So it identifies momentum swings in the market. Sorry, let me put that back on. Momentum swings in the market. I was going to edit this to take off plots. And I'm just going to take off these plots because we don't really use those plots. This is like how I use them. I basically take off the plots, I take off the background. So you just have the vertical lines on the chart showing where, price is going. So I think this is the one that you guys kind of were confused about too, Purity, with the momentum indicator. It's harder to see here on the 1 minute because there's so many different momentum swings. I'll go on something higher, like the 1 hour here, or even the 1 hour is kind of messy. 4 hour. Okay, so this will probably help a little bit. So as you guys can see right here, what this momentum indicator does is it just identifies where momentum swings happen in the market. So like, for example, right here, we have a buy signal, right? So price pushes to the upside. When you get a sell signal right here, price pushes to the downside. The thing with this is that you're supposed to use this in combination with like a trend meter or something, the trend meter or the pivot, so that you know where the trend is going. So like, for example, right here, you can see from a bird's eye view that price is trending down, right? So if price is trending down, you can see that you wouldn't take these buy signals, you would take the sell signals because you want to trade in the direction of the trend. So in order to simplify that, you can tie this in with the pivots. So like right here, price is below the pivot, you get a sell signal. You enter a sell at that point. Huge move right there, right? 7,000 pip move. I'll get to the trend meter a little later. But this is just to show you that you're supposed to use this with other things. That's why this is tied in with almost every strategy. Just giving you guys a basic view here. Here's a sell signal. Look how price pushes down slightly. This buy signal right here, price pushes up. And then again, sell signal, price pushes down again, right? So pretty self-explanatory. The K2 momentum indicator just identifies momentum swings in the market. You're basically just writing them in the direction of momentum. And you'll just tie these in with the specific strategy that you guys are applying. So give me 1 second, guys. I'm gonna grab some water and then I'll be right back. All right, guys, are back. So we have one last indicator to cover. We've covered the K2 high-low, K2 pivots, K2 sessions, K2 SR, K2 SR version 2, K2 momentum, and lastly, we have the K2 trend meter down here. This is, again, self-explanatory. I try to keep everything as simple as possible. As you guys can see right here, there are colors on the bottom. This is the K2 trend meter. What the K2 trend meter does is it identifies the overall trend in the market. So for example, right here, when the trend meter is green, this indicates that sorry guys, 1 second. My dogs are running. Okay, it's fine. All right, so basically the trend meter down here, when it's green, this indicates that the trend is bullish. Vice versa, when the trend meter is blue, this indicates that the trend is neutral. And when the trend meter down here is red, this indicates that the trend is bearish, right? So what this does is this basically gives you a quick overview as to where the trend is moving without having to draw a trend line, right? Like for example, here, you don't have to go and draw a trend line here to identify that price is trending up. You just look down and you're like, okay, the trend meter is green, so obviously price is trending up. Right here, you can see the trend meter is blue. So if it's blue like that, this can, basically give you a hint that price is consolidating, right? Right here. So instead of having to draw, consolidation, you can see that price is consolidating. Vice versa. Again, right here, the trend meter is red. So instead of having to draw a trend line right here, it's just too right here. It's just easier. So instead of drawing the trend line right here, I mean, literally all you need to do is look down at the trend meter. So this just simplifies everything. This just puts everything together that instead of having to do all this work, you literally will just turn on the indicator and it'll pretty much do all the work for you, so that you don't have to go and draw trend lines. You don't have to draw high lows. You don't have to draw support and resistance. Everything's pretty much done for you. It just depends on what you're looking for and what you need. So if you need to look for the trend, you can use the trend meter or you can use the pivots. If you want to look for high lows, just turn on the high low. This will tell you where the high lows are. If you want to look for where the previous session high lows are, turn that on. If you want to look at support resistance, you turn this on. It'll show you this is a support, this is a resistance. If you want to see where a lot of the support resistances are farther back in time, just turn on the version 2 and you guys can see support, resistance, old support, resistance, etc. And then lastly, when I was going over the momentum indicator, this is where you would tie in the momentum with the trend, right? So like, for example, here, price is trending up, you have a momentum swing to the upside, right? So if you were to see something like that, you would take a buy, right? I mean, you probably won't ride it for this far out, but you'll probably take it from the previous swing, which is over here, for about 3,000 pips. And that would hit your TP right there, right? This is like the most basic strategy that you can apply. Literally, you're just applying momentum with the direction of the trend. Again, right here, you have a sell signal. Trend meter is red. You enter a sell. Full TP right there for about 7,000 pips. So I try to make things as simple as possible. That's the main reason why I created these indicators. This is why you won't find any indicators like this online, because the thing is, I don't use any of those indicators. I create my own indicators because I know what I'm looking for in the market. So hopefully that gives you guys, a good understanding and breakdown as to like how all these indicators work, the reason why I created them. And I mean, the opportunity with using these indicators are really endless, right? Like for me, I use them for momentum trading, but for you guys can use them for whatever you want. You don't have to momentum trade. You can use them as like break and retest tools, right? If you're using the support resistance right here, like for example, price will break support right here. It'll retest and then you can just take another buy there, or price will reject off the resistance over here. It'll come up for the retest and then you can take the sell right there, right? There's different strategies that you guys can apply. You don't have to apply the K2 strategies. If you have your own strategy, you can use these K2 indicators to simplify your strategy, because the thing is, I see a lot of people who have a lot of problem identifying support and resistance, right? I feel like everyone kind of does it differently. And if that's your problem, you just turn on the indicator. It does the job for you. I see some people who have a hard time identifying the trend, right? If that's a really big problem for you, turn on the trend meter. If you have a problem identifying the shorter term trend, turn on the pivots, right? There's endless possibilities with how to use this to cater to your own strategy if you don't want to apply the K2 strategies. You don't have to apply the K2 strategies, but these indicators work for any type of trading style. It doesn't matter if you want to trade on the 4 hour, we have the trend on the 4 hour. If you want to trade on the 1 minute, I have the trend here on the 1 minute. You want to trade on the daily, like it doesn't matter. You guys can trade on any time frame. A lot of people complain that I scalp and people don't like to scalp. Well, where's your excuse now, right? We're on the 4 hour time frame. So why can't you trade this on the 4 hour? It's the same thing. It's just on a different time frame. So just cut the excuses, guys. That's what I want to tell a lot of people. Like everyone has something to complain about. Everyone has something that they just want to blame somebody for. They want to say that, Sean scalps. All he does is scalp. I can't trade K2. Well, look, the strategy works here on the 4 hour. What's your excuse there? Oh, the 4 hour is too long. I want to trade on the 30 minute. I'm on the 30 minute. Where's your excuse there? Right? It doesn't matter, guys. Like I hear these excuses all the time, and it just blows my mind, because the thing is, these indicators work on all time frames. It doesn't matter what you trade. People complain that I trade US 30, right? What do you want to trade? You want to trade Bitcoin? Go ahead and trade Bitcoin. I don't know, what is it, BTC USD? Or not this one. Coinbase is probably the better one. If you guys want to trade Bitcoin on the 4 hour, right? I mean, where's your excuse, guys? There's your momentum indicator right there. There's your trend meter. It's a full TP right there. If you want to trade your USD, I could literally show you guys a million examples here to debunk whatever argument you guys have that this doesn't work on other things, right? Full TP right there. You want to trade FOREX. I mean, it doesn't really matter. You could use it on anything you want. If you want to trade a stocks. I mean, I feel like a lot of people look for an excuse to say that things don't work for them. But realistically, if you want to trade Amazon, I mean, the strategies work on everything. Literally whatever you guys want to trade. You want to trade rice, soybean. I don't know, whatever you guys like to trade. I'm just tired of hearing excuses, guys. It drives me crazy when I hear people complain about things, and it's like, all right, let me go and prove you wrong, because it obviously works. You want to trade soybeans, go ahead and trade soybeans. It works. So I mean, whatever, guys. It doesn't really bother me that there's always someone that has to complain about something. I'm still gonna make my profit regardless. I like to trade US 30, so I'm gonna stick to US 30. If you guys want to trade something else, feel free to trade whatever you guys want to trade. But what I do recommend is to find something that you're good at and to master it. I've been trading US 30 every day for like the past 3 to 5 years, and the results speak for themselves. Like you guys can see where I'm sitting at this week so far. This is just for this week. I was showing Victor earlier. Like this is me from last week. and this is me from this week, right? You guys don't have to trade US 30. You can trade Forex, you can trade Bitcoin, you can trade crypto, you can trade XRP. I think that's like Aaron's favorite thing. I don't know if Aaron's here right now, but I mean, if you want to trade XRP, you guys, it works the same way, right? Trend meters green, buy signals right here. Same thing, right? There's like 3 back-to-back wins right here. Same thing lines up, green and green, green and green, green and green. Doesn't matter what you guys want to trade. It doesn't matter what time frame either. You want to trade on the 4 hour, you want to trade on the 1 hour. There's another entry right there on the 1 hour. So I'm just trying to show you guys the possibilities here, because you know, the thing is, you don't have to trade US 30. You don't have to trade. You don't have to scalp. You can trade on the higher time frames. It's just up to it's up to your preference. But yeah, so that's it with that question right here. Hopefully that answered your question, Alexander. That was I pretty much covered all the indicators. I don't know if there was another indicator that you wanted a deeper dive on, but for the most part, I think that's it for the indicators. So let me just scroll up real quick. I want to make sure I didn't miss anything. Let's see. So, all right, let me just scroll down a little further and see what I saw your messages right now. No, 100%. 100%. Let me see if there's anything else here that I missed. Peter said, when's the VTO indicator coming out? Right, I gotta set that up for Rick. Yeah, no problem, Alexander. All right, so that's it with those questions right there regarding the indicators. Let me just scroll up real quick. Swaley's asking to pay for the indicators. We get them right away. Yeah, you do. So, well, I mean, depending if anyone's looking at the email, so you basically just email your information and then it'll update the system. But if nobody's looking at it, then you'll get access after the live, because I can do it myself, but I can't do it right now, obviously, because I'm on the live. Other than that, let me just scroll up real quick. Guys, so I see there's a lot of people here with their username is iPhone. If you guys could change your username to like an actual name, that would help, because we have like 12 iPhones. I feel like we have like 12 iPhones in the group. So a lot of people are asking questions, but everyone's name is iPhone. So I don't know who's who, and I can't address your question because there's people named iPhone that's asking one question, and then another person that's named iPhone that's asking another question. And then I see someone with iPhone that's direct messaging me to please go over my issue, but I don't know which one's your issue because there's too many iPhones here. So if you guys log on to the Zoom, try to just put your name on there, okay? Just so I can check. Oh, gotcha, Stanley. Okay, Stanley's iPhone 12 PM. I'll try to remember that. I mean, yours stands out, so I'll know that. Let me see who else we've got over here. All right, so we still have, I think we had another question here regarding the indicators. Let me scroll real quick. So SA is asking, where can I get the K2 indicators? If you have access to the K2 indicators, you need to subscribe to the strategies to have access to the indicators. But if you do have access to them, you just click on indicators here. It'll be under invite only scripts. This is how you'll know that you have access to them. If you don't have access to them, then you can upgrade on the website. You just go to the website here, K2 Trades, and then you scroll down to the bottom. And then this right here is the strategy subscription. This will give you access to all the indicators. This is only for the live trading room, but this is for the indicators and the strategies. So just go on the website, k2trades.com, scroll to the bottom, and you'll have 3 different options here. This is just for the live. This is for the actual indicators, and then this is for the year. If you get a discount if you end up doing the whole year up front. Other than that, let me move on to the next question. We still have a list of questions here, guys. So if you guys did ask questions, your questions we'll get to. But the next question on the list is from Alexander regarding entering market price. So from your message earlier, Alexander, I think you were asking like, what's the best way to enter market, right? The best way to enter market is right away if you are confident about the position. So let me go to the breakout this morning. So the breakout this morning happened over here at 6:30. Go over here real quick. And I think this question lines up with Victor as well, because you were asking about the breakout. So the breakout happened right here at 6:30. And Alexander's question is basically, he's basically asking, what's the best way to enter a market order? So for example, here on this breakout, if you guys remember this morning, it was a risky trade because this candle was too big. So I personally didn't want to enter right at open because I did expect it to pull back a little bit. So for me personally, if I'm not confident about the position, I tend to let it pull back a little bit. So like for me, I wouldn't have entered this at market, right? I would have waited for it to pull back because this candle is huge. So like right here, price pushed up, it pulled back a little bit. This wouldn't be a market order here. In order for me to enter this position, I would have a buy stop. So I'd have a pending buy stop waiting right here because I do expect price to pull back. Whenever you see a big candle like this, price tends to pull back either half of the candle, like it did right here, or the entire candle. So what happens is price will likely pull back halfway and then it'll shoot right back up, right? Or it'll pull back the full candle and then it'll shoot right back up. And in this situation, if that happens, it'll hit the stop loss before it ends up pushing up, right? You get a lot of manipulation when the candle is overextended like this. So in a situation like this, I would wait for the pullback before entering. But if you want to enter market, because your specific question was when's the best time to enter market, right, Alexander? If you want to enter market, you just got to enter as soon as it closes. So what you're doing here is you're just waiting for that entry. As soon as it closes, you hit buy, and that's pretty much it. And then you just let it run to the full TP, which it eventually hit. But you guys can see how risky this was right here, right? I don't like entries like this because this candle was too big. Let me go over to yesterday's, which was actually a smoother move. I mean, pretty much the breakout's been hitting every day for the past, I mean, I don't even know how long now. It's been hitting for like weeks now, but basically the same situation happened over here again, except it was a follow-up candle. So for yesterday right here, this is the opening. So like, for example, right here, I would have held off on entering this one right here because it's just too big, right? I can't remember if I entered that position or not. I don't, oh, actually we did enter off this, but I did the same thing. I didn't enter at market, right? I just kind of entered as price moved along. However, if you entered right here, you waited for the next one, this is where you could have entered market as well. So if you wanted to enter there, it'd be fine. If you want to enter here, it'd be fine too, but this would be kind of late. Like I wouldn't recommend entering this late. So depending on where you want to enter, Alexander, if you want to enter market, just enter right at that point and then let it run. If you trust it, that's going to push up. The reason why we trusted this yesterday, and I remember this trade yesterday, was because our bias was actually bullish. Everything was already bullish. So we just entered and then we took the trade and then we let it run to full TP. That's pretty much how I locked in the profits from yesterday, which were these right here, right? We took this buy right here. So this is from this entry right here. And then there was another one from the one today, which is over here. But can you guys tell the difference here? So the difference from today was that the first candle for entry was too big, right? So I would have waited for the pullback. The entry from yesterday was the second candle. So like the first candle right here was already big and strong. If I would have skipped this and waited for the next one, then this one right here was already a continuation. So the pullback happened. Actually, I do remember now. The pullback did happen right here. I did the same thing I did today, except the pullback was a lot smaller. It was just like this little pull right here. So when price did pull back a little bit, I did the same thing. I entered a buy stop right here, and then I just wrote it up. Let me go back to the one before that. It was Easter last week, so I didn't have anything on that Friday. but we did have one on the 14th over here, which was a bit of a smoother move. Okay, so again, right here, this is the same kind of setup as we just saw from yesterday. Market opened right here at 6:30. So this candle right here didn't count. This is not the breakout. The breakout would have been this one right here, but we already had the bullish push right here. So for example, if this was the opening candle, you can see how it kind of pulled back a little bit. Then I would have done the buy stop. However, for this trade right here, this was the second candle. So it already pulled back. So if I was to take this one right here, I would just enter market without waiting for a pullback. And then I would have let it run. And you can see right there, it went straight to full TP. The key thing to look for here is just the first initial push, right? If the first initial push has already happened, which it did on the prior candle right here, you can see how the pullback already happened right here, right? It's not going to happen for the next one because it's already happened. It pulled back and it already confirmed its direction. So at this point, you enter market and then you let it run. Vice versa, if this was the initial entry, like it was today, you would wait for the pullback. So hopefully that makes sense. Let me see if let's see if that makes sense. If Alexander's here, I'm not sure if Alexander is. Okay, perfect. Yeah, you got it. Gotcha. All right, so let me see if there's any other follow-up questions to this. Let's go up real quick. Thanks, guys, for answering Angela's question right there. All right, cool. Yeah, it looks like Angela did get her question answered. Yeah, so Angela basically asked, how can you identify when like it's a big candle or not, or if it's too big, right? In order to do that, you just have to look back at the previous, let me see if I can find. Okay, so like, for example, right here, the entry today, right? You could tell this candle is big or it's too big, like it's overextended, because you just compare it to the other candles, right? This candle right here was a, let me measure it for you. This candle was a 750 pip candle, right? Huge candle. You compare it to the other candles right next to it. The candle right next to it is only 300 pips, right? So this is basically double the candle. The one before that, it's even smaller. It's 150 pips, right? So that's how you guys can tell if it's a huge candle. And it's pretty obvious if you look at it. I mean, it might not be obvious straightforward, but the more and more that you see these candles, you're gonna be like, okay, this candle is a huge candle compared to everything else. Because this candle could literally engulf the entire move that happened for the past, 2 hours. Because this is how big the candle was, right? This is how big the candle was. This will literally eat up all the candles right here. So just one candle being able to push farther than all of these candles for like hours on end will indicate that, okay, this is a huge candle compared to everything else. So hopefully that helps with those questions there. Let me see if there's anything else here that, hey, Stanley, I see your question, but there's still like 4 questions left. So we'll get to your question as we get down the list, but I will, I'm not going to miss your question. So just if you could hang on, I'll get to your question, but I got to go down the questions in order. So Rami's question is, Sean, when's the last time you took the breakout for the full move? It's been a while. I think it was like, and when was it? It was that day when I locked in like those crazy profits. I think it was like, let me see if I can find it here. I don't remember the date, but you guys remember that it was like NFP on like in January or something, where like, I mean, you guys remember that it was like the last week of January or first week of January, I think. Like the profits were like crazy huge. Like they were big, like a lot bigger than, it was like my biggest profit day. I don't know if it was this one. Let me see if I can find it here. Or it might have been February. I know is when I sent like the and I can't even remember. Let me see if I can scroll up real quick. The last time we took it, or that I personally took it, I don't really take the big moves like that because they're just too risky, especially if I'm trying to trade the rest of the day, right? It was like, yeah, I can't remember what day it was, but I locked in like crazy amount. I think it was because we took the we also took the daily that day too. Yeah, I can't remember. It was like one of the early days. But if you guys were on the live like earlier this year, you guys remembered because it was a pretty big profit day, and it was like the biggest profit day I've ever seen myself. Yeah, unfortunately, I can't pull it up, but it was somewhere around there. Anyways, pretty sure a lot of you guys remember that. Rami said, I'd done it for the first time the other day and I was sweating, and I don't think I can do that again. Hey, Purity, I see your question right there too. Guys, try not to ask the same question twice, because the thing is, I did see your question. If you guys are asking it more than once, you're going to get knocked to the end of the list, right? Because we have a lot of other questions here. If you put your question in the chat again, I mean, if you guys put your question in the chat already, we're going to get to it. Just, you guys got to be patient and wait for it. You guys got to keep in mind that there are like other questions in the group that came before yours. So just be patient and wait for me to get to your question, guys. Because if you guys keep asking the same question, I'm going to skip over it because I would have seen it on the bottom again. So just wait for me to get to your question, guys, and I'll get to it. Because I see a lot of the same questions here, and it's like blowing up my whole feed right here for the Zoom. So let me just scroll down real quick. I covered Alexander's first question for the indicators, his second question for the market price. Next up, we have Solo's question over here. So just keep in mind, guys, this isn't a K2 strategy. This is one that Solo kind of put together on his own. It's basically the variation, but he has a few more requirements to it. So don't confuse this with something that we already have. Well, I mean, you're going to confuse it because it looks like the variation, but we have, let me see his requirements here. Some high lows. So basically he's applying the variation. I'll go on the 10-minute. I'm just going to take these off because it's just it's too much on my chart right now. So let me get to that right now. All right, so question over here is from Solo. He's basically asking me to look over a certain strategy that he applies. Confirm high low. All right, so basically this is like it's like a multiple confluence strategy. It looks like Solo's strategy here is basically a V3, but he's also combining it with a V2 because he wants a strong candle. It's not a range, pending momentum, bias. Gotcha. Okay, yeah. So Solo's strategy here is basically it's like a double confluence. With a couple more confirmations here. He basically doesn't want entry to be close to support and resistance. I'm sure you want to include sessions there too. That might be another one that you want to include here. I'm sure you thought of it, but you just put support and resistance, but sessions and news price, opening price would probably be another thing that you wanted to add there. So basically any of the riskier areas, don't want to trade around the risky points. So your take profit is either a 1-to-1 or 500. Do you mean 500 pips or 500 points? Because this is a 5,000 pip move. Okay, pips. Yeah, gotcha. No problem. Stop loss is at the bottom of the low. Gosh, okay. No, this is solid. I think this is good. You're basically just you're looking for a better confluence for the V3 and you're combining it with the V2. So let's see. I think just want to make sure I'm not going off track and get your take on it. Still strong win rate. So do you apply this on the 10-minute or the, oh yeah, you do. I see you do. Because I just saw yours here says 5-minute plus. So let's just check it out. I'll look for one entry here that would apply. Looks like this one right here would be one. Right here. Or maybe it won't be because it might be too, let me just map it out. We'll see. So you're going for about 500 pips. Yeah, no, this is solid. So this is a strategy that that Solo is applying. It's basically a V3, but it includes a strong candle. This doesn't have, I don't know if you'd consider this strong candle. I wouldn't because there's a wick on top. So this might not be an entry for you. Let me just check that real quick. Yeah, so I wouldn't consider this a strong candle. This is just a normal V3. If you were to take this trade here for a V3, this would have hit full TP right there. Let me see if I could find another one here somewhere. This one, I see this entry here, but you wouldn't have taken it because the sessions are too close. So even if you were to take this here, it cuts into the session. So I would have skipped that one right there. Those are kind of hard to come by, the ones that you're looking for. But I mean, that could be a good thing because if they're hard to come by, you're probably not going to, this looks like, I'm trying to figure out like, how do you identify a strong red candle? Solo, are you looking for no wick at all? Or are you looking for something where there can be a small wick like this right here? Because if there's a small wick, then I guess you can consider this an entry right here because there's a small wick right there. It's not a huge wick, but it's, I mean, it just depends on how you identify what a strong candle is, right? Stop loss would be too close right here. So you probably wouldn't take this because you're looking for about 500 pips. See if I could find one here. Probably not here because this is Asia session. That's in a strong candle. Doesn't really look like a good time to, let me go over here again to prior session. No, there's no pending buy. How far is this? Too tight. Yeah, the only problem with the 10-minute here is that you're going to cut into the Asia session a lot. So it's going to be hard to find. But I mean, your strategy does look solid. Yours is just, it's a little more careful than what I'm applying because I'm just applying the B3. You're looking for a strong candle as well, which is actually better. Let's see. Where is this? Yeah, it's kind of hard to find. Okay, so this right here looks like it would be a perfect entry for the strategy that you're applying because this looks like a strong green candle following the low. So 3-minute variation, basically you're looking for a low there, strong green candle to follow it. Your long position right here. Your stop loss would be, you said it's either 500 pips, one-on-one risk reward, or it's going to be max 750 with a 500 pip TP. So you're basically just going for 500 and then you're setting the stop loss a little wider in some instances to cover the spread in some cases, right? Which is a good thing. A lot of people don't like to use a negative risk reward, but if you're using a strategy that has a high win rate like this, you know, it's completely fine. You don't have to, there's no like hardened rule that says, oh, you have to trade 1-to-1 or better. Because the thing is, if you're trading something high with a high win rate and you keep winning, you don't have to really worry about the losses, even if it's very minimal. So right here, this looks like a good entry. Fit your requirements. Let me see real quick. Confirm the high low. There's a low right there. Confirm the following candle is a strong green candle right there. Confirm it's not in a range. It's not ranging right here. It's moving directional. see. We can't really confirm bias because this is in the past, but we're just going to, let me turn off the trend meter so it doesn't confuse you. We're just going to assume that it was overall bullish. What else to look at here? I think everything lines up. If you were to take this trade there, yeah, although it'd be a bit risky. The reason why it would be risky here is because it's like right at open, 6:30 right here is where the market opened. So I probably would have not, well, I know I did take this trade because on the 13th, I mean, I even took that trade myself just as a V3. So April 13th, I did take that trade myself, which is right here. You can see I made 1,250 off that. I took it pre-market right here at 619. So I was actually in this trade, the one that we just identified. I was in that one, but I pulled out before market open because, you know, obviously the craziness right here. So, yeah, I mean, for the most part, it looks good. So I'm not sure if there's anything else that you want me to cover. If there's a specific entry that you like were confused with and you wanted me to, to look over like a specific trade, I can look it up if you have the timestamp. But I think for the most part, just looking over the strategy here, it looks fine. It looks just like a V3, but better. Not necessarily better, but you know, the requirements are higher, making it a bit harder to identify, but it doesn't look like it loses very much. Yeah, I looked at yours here. So the photo that you sent me earlier, there's no entry off this one right here. So I see that you have this here, but it doesn't fit your requirements because you have to have a low and then it has to be opposite candle. So this one right here wouldn't be an entry. This one right here would be an entry and it does hit TP. This one right here, I'm trying to see what this one is over here. This one over here is it's an entry, but I'm trying to figure out, like, I'm assuming you went for 500 pips here. So if this was 500 pips, and that's perfectly fine because it does fit your requirements. It just looks like it's a lot wider though. Is this 5 o'clock? Are you on because I think your time zone's different. Yeah. If you can tell me what time was this Pacific time, I can probably, let me see if I can pull it up. I'm assuming it's this right here, right? So if it was that one, yeah, I mean, your TP was like, you could do that. I mean, there's nothing wrong with doing this right here, but I don't think this fits your requirements, right? Because you were looking for, you said your TP has to be equal to stop loss. So it'd have to be 500 pips. Like it'd have to be at least 500 pips. Right here, you went for like 380, which is okay. I mean, you could do that, but you'd want to have like some sort of set requirements, you know. I would consider this risky, but it does work out. I think you did a smart thing here because you pulled out before it reached the sessions. And I would have done the same thing. So if I was looking for a risky trade to take, I would have taken this and I would have done the same exact thing you did. I know the split kind of sucks with the risk to reward, but you could have done like 38.50 or even less than that, 30.50. And you'd still be fine. You're like at a 200 pip negative, which is fine. You know, if you win the trade, which you did here, obviously, to be perfectly fine. Get out right before it reaches the sessions. So gotcha. Okay, I see your question right there. Solo. Yeah, no, that's solid. I mean, it works fine. I think this might be too close to it. Or okay, I get what you're saying. You're saying that it has to be at least like 200 pips from the session, so you can actually like catch, you know, like a partial move of it. So yeah, no, I definitely do agree with your entry here. I just don't. I don't know. Maybe this was an accident here where you took this trade. I don't see an entry right here for this one, but everything else looks fine. This looks good. This would have hit full TP. This looks good. Would have hit TP before I hit the sessions. This looks good as well. Perfect entry straight to full TP too. But yeah, overall, I think it looks good. You're basically just applying the V3 with an extra requirement for strong candle. So yeah, looks solid, Solo. So I would keep doing it. I would keep testing it. I think it would work fine because you're basically just applying the same V3 that I've been doing, which I haven't lost with in like months now. But you just have a better requirement with a strong candle. So pretty solid. All right, so I think that's it with that. If there's anything else that I missed, Solo, just let me know. But I think we covered that strategy pretty solid. I think you're good. And I think you're really like that was a smart move of you to because I do this too sometimes. I don't tell people about this because I do think it's risky trading near the sessions, but that's exactly what I do too. I just don't like telling people because people get upset when you use a negative risk reward. But a lot of people don't realize that you can use a negative risk reward if you have a high win rate strategy. And since you know exactly where price is going to bounce from, which is the sessions. iPhone, I'm getting to your question. There's still like here, iPhone, this is what you could do. If you guys ask the question, just scroll up to where your question was and scroll up to see like every other question that I haven't answered yet. Because Leash is next, and she has like 2 questions before iPhone, and then you're right after me, iPhone. You're right after Leash. So your question's coming. You just have to wait for me to get to it, guys. Um, if you want your questions answered right away, you guys got to be to the session on time, and you have to ask the question before everybody else, because I'm answering everybody's questions in order for whoever asked the questions first. So just be patient, guys. I mean, if you guys want your questions before, you can send the questions before the mentoring session, and I can answer your questions right away, just like I did Alexander sent me this question at 7 a.m. So he knew what he needed help with, and I was able to answer it. If you guys want your questions answered earlier, you guys got to send your questions in earlier before everybody else. Other than that, let me see if there's anything else here that I'm missing before I get on to the next question here. So I think this is it with these. Now let me get to the next question, guys. You guys got to be patient, okay? I keep getting a lot of direct messages here, like private messages from you guys asking if I can answer your question. I'll get to your question when I get to your question. But there's other questions here that are before yours. So next question is from Leash. Leash is asking, can you also tell us the other indicator you use on the clean chart, the one that determines the high lows? Can you find it on TradingView? Yeah, Leash. So that indicator right here is these numbers, right? It's a built-in indicator. So let me just turn everything off right here. It's this one right here, the pivots high low. So I'll just turn that off. I'll show you how to find it on here. You go to indicators, then you go to just type in pivots, and it will show up under right here. So it's a built-in indicator that's created by TradingView. So you just go to pivot points high low, you click on that, and then it'll come up on your chart right here. It looks different because they've updated it. It's just a different color. So like it's just white now. The old one was like that. It was like a little colored bubble, but you can just change it. So just go over here to the pivots high low indicator, the new one that you just added on, go to settings. And this is a TradingView indicator, so it's not something I created. It's just something that's already been there. You go to inputs, and then you can change the color. So you can see the numbers right there. You can just change the color right there. So the next box right here, if you want it to look just like mine, I think mine is like yellow, like a shady yellow. So you just change that to yellow, or you want it a different color like green. I mean, it's really up to whatever you guys want to color it. I think this probably work better if you change it to like green and red. So this is the high and the low versus it's basically how mine looks right here. High low indicator. It's just that mine identifies it identifies more high lows rather than just the ones that are kind of spread out. So that's how you turn that on right there, Leash. Next question from Leash is, could you please provide an example of the 10-minute snipe strategy? Also for those trading during Asia session, how would you determine the direction of bias, retail sentiment, and fundamentals? So let's do that right now. Let me close this. Let me see if we can find an example of a snipe entry during Asia session. All right, so let me see if I can find one here. I don't think there's one that came up anytime recently. Let's go over here. There's Asia session from yesterday. All right, so here's an example. So what I'm going to do right here is I'll just mark up the snipe. Okay, so this is the snipe strategy. In order to use this strategy, you need to identify the pivots and the K2SR. So we got a K2SR right here. The indicator that I use for this is going to be the K2SR version 2. So if I turn that off, you guys can see there's no structure there. If you turn on the version 2, you guys can see that there's structure at that point, right? So once you have that drawn up right there, and I just drew that right there, I'm going to rewind to that point where I saw the entry right here. All right, so as you can see right here, okay, so the first requirement is to confirm a wick rejection off any pivot. Let me just delete this. So confirm a wick rejection off any K2 pivot, right? So off this candle right here, you guys can see that this wick is rejecting off the blue pivot, right? Which is right there. That's going to be the first requirement. So first requirement, we have a wick rejection off the pivot, which is right there. The second requirement, you want to confirm a wick rejection off the K2SR zone. There's a K2SR zone right here. I'm going to go and draw a rectangle over it so that it's easier for you guys to see, so I can hide the indicator off the chart. So we got one right there. Turn that off, and you can see it a lot better. So first requirement, wick rejection off the K2 pivot. Second requirement, wick rejection off the K2SR zone. Third requirement, you want to confirm the wick rejection off the pivot does not touch the candle body. So the pivot's down here, the body's up here, right? It's completely fine, doesn't touch the body. Lastly, you just want to confirm that you're trading in the direction of momentum. So you just want to look back to see where the most recent momentum signal is, which is right here. And from this point, you'll take a buy. So you have that set up right there. You enter a long position right here as soon as the candle closes. You ride it for 500 pips. And does it ever go up? I don't know if price ever goes up. So this right here looks like it got really close. I don't know if this entry point would have been at that point right there. Let me see. I mean, it looks like it's on point. So it looks like it got really close to it and then it hit stop loss at this point, which happens. But this is an example of a snipe, right? I don't trade during Asia. This was actually a bad time to enter the trade because this is where it starts to turn over into London session. One thing that I noticed when I did trade Asia is once it hit 10 p.m. my time, which is right here, 2000, or I don't know how to say this in military time, but basically 20. This is 10 p.m. my time. Once price reaches this point, it's similar to the mid-market reversal. So the mid-market reversal during New York session, this is where market starts to act a little weird. From this point up until, I think this is 8 o'clock actually. 8 o'clock, I meant 2200, sorry, right here. 10 o'clock. So between 10 and London Open right here, this is where you get the weird movement because price will be dropping all throughout Asia. And then you can see right here, once it gets close to this point, price consolidates for a bit before it ends up reversing, right? Because this is now London session. So this is where it kind of differs. You know how we have the mid-market reversal during New York session? This is the mid-market reversal during Asia into London. So when you go from session to session, there's always going to be some sort of mid-market reversal. For New York, it happens between 10 and 12. For Asia, it happens between 10 and 12 at night, my time. So same thing right here, 10 to 12, this is where you get the consolidation and then it reverses. So I personally wouldn't have taken the snipe right here. I know this is something that I haven't really told you guys, but it's the same thing, right? You just reverse the time. Basically from New York, it's from 10 to 12. And then same with Asia, it's from 10 to 12. The only thing that doesn't happen, well, actually, it's the same thing because Asia will overlap with London. London will overlap with New York. So the same concepts that we use from New York up until Asia, it's basically the same thing. So for this right here, I would have avoided this trade, but this is just an example of how the strategy would be applied. The second part to your question was, how do you identify retail sentiment? It's the same thing. You use the same exact website. You just refresh the same website that we're on, and you can see right here that it's updating. The sentiment is still updating right here. In order to do the fundamentals, you just look at the fundamentals right here. You can see that it's still updating here as well. Well, technically the market's closed right now. It's 3 o'clock. It'll reopen in the next 30 minutes, but right now it's closed. So if you're trading after hours, this is the futures one. You can tell that these are different. This one says Dow Jones Industrial Average, and you can see the last time it was updated was yesterday. So this is from this morning. This doesn't update. If you use the fundamentals, this is the futures. This doesn't close. So this stays open. This is what you'll use after hours during Asia, but you're not going to see much movement because you're looking at an asset that doesn't trade during Asia session. It's traded very lightly, but it doesn't trade as much as it does during New York. So this is another reason why it just doesn't make sense for you guys to trade US 30 during Asia session. It's possible to trade it, but you want to stick to the session that actually trades during that time frame. So if you want to trade Asia session, then you might be better off trading an Asian asset, right? You should click on Asia right here. They have the Nikkei, they have the Shanghai, HSI. If you want to trade the UK assets, they have the DAX, UK 100. There's different assets you can trade. You don't have to trade US 30. So just keep that in mind, guys. I feel like a lot of people try to trade US 30 all throughout the day, which is possible, but odds are you're probably gonna get caught in that position for hours and hours and hours, and you're not gonna see any movement. So that's something to, obviously keep in mind. I try to remind you guys every day that that there's a reason why I don't trade during Asia, right? Because I only trade US 30. So I only trade during New York. Because if you trade at night, you're going to get caught, or night my time, you're going to get caught in this right here, where price will go sideways. And then if you waited for another entry over here. So here's where I would take a trade. I wouldn't take a trade right here because this is considered the mid-market reversal time. So this whole period right here, I wouldn't take any trades, right? Like literally this whole period right here. It's just, there's no reason to take any trades between here, and I would extend it out to the first 2 hours of London. And if you go back and back test it, you'll see that during this period from 10 to about 2 a.m. my time, basically the last 2 hours of Asia and the first 2 hours of London, you'll see consolidation right here. But then as soon as the 2 hours pass, you'll start to see a direction right here, right? So as you can see at this point, there's another snipe right here, and this is where I would actually take it. Let me just rewind this a little bit. So there were a couple entries right here. There's actually 3 different times you could have entered a snipe here. The reason why I would take this is because this is basically the same way that we would trade New York session, right? London is okay to trade. Asia, I just wouldn't even bother with Asia. You can trade London into New York, but I wouldn't even bother with Asia here. You can see here that price did kind of get close to it. If you decided to trade during Asia, I wouldn't use the full TP. So like, let me go back to the previous markup. Okay, so right here, see how price didn't reach the whole 500 pips? If you want to really trade during Asia, just do half the profit because you're not going to get much movement. So if you do half of it, instead of 500, you go for 250, you would have hit your TP right there, right? Because there's no volatility during Asia. This is why I always try to tell you guys not to trade during Asia, but people still trade during Asia, even though it's not really worth trading. If you see other people here who trade during Asia, so I could be hitting these scammers in the group. Valentine. So Valentine does trade during Asia, but he trades a DAX. So you can see right here, he trades a DAX. Same with Lisa. Let me see. I think Lisa trades, I mean, she kind of trades everything, but she kind of bounces around between different, trying to see where she posted her profits. I know she posted them somewhat recently. Where's Lisa's profits at? Lisa was right over. Oh, she didn't show what she traded, but she trades during Asia because she's located in Bali right now. So she but I mean, yeah, she trades other assets during that period. So just something to keep in mind, guys. If you guys do try to trade during Asia, just go for half TP or half stop loss. Yeah, I know Stanley said definitely true. It happened to me before. And it happens to me a lot. Well, it happened to me a lot before when I used to trade during Asia. The problem is you guys will be in a trade, it'll be in profit, and then it won't move for like a couple hours and you're like, crap, what do I do now? If you go for a half TP, you can still hit your TP before it reaches. But that's probably the best advice I can give you. The best advice would be to not trade during Asia, but if you really want to, then just go for a smaller TP. I mean, you could even keep your full stop loss there. You'll just go for a negative risk to reward, but odds are you'll probably hit your TP, before I hit your stop loss. So yeah, hopefully that answers your question there, Leash. Let's see if you can't find one. Yeah, no. So hopefully that helps, guys. I feel like this kind of answered a lot of people's questions who like to trade during Asia. If you guys want to look at the fundamentals, just go to this right here. So go to CNBC. If you want to get the futures data, just go to pre-market. So if you go to pre-market, this is going to have the futures. This is open like all day. If you go to US, this is going to have what's only open during US session. If you go to pre-market, this will have the futures. So you can see where it says FUT, that means future. It runs pretty much all day. And that's where you can look at it if you want to trade during Asia. If you want to trade an Asia asset, click on Asia. They'll have the Nikkei, Shanghai, HSI, etc. If you want to trade European assets, go to EU. It'll have the DAX here. This is the equivalent to US 30 for Europe. And then the FTSE, which is the UK 100. I don't know what CAC is. I've never traded that before, or these either. So that's how you guys could find the futures data. And that's the difference between this one, which is actually moving. And if you look closely, this number will change slightly. Probably not much because market is closed, but you'll see it move slightly. But yeah, I mean, other than that, no problem, Leash. Glad I could help you with that. Okay, on with the next questions. So I'm gonna try to get through these questions quickly. Sorry that I'm taking so long, but there's a lot of questions here. Okay, so iPhone, finally back to your question. Sorry that it took so long, but let me get to it. So you said, Sean, how are you? Great. I need to get right about FTMO trading date. They have a start date and end date. So the 10-day is in that range from start to end date. Yeah, so you have to trade. Let me go to FTMO real quick. So finally, it's your question, iPhone. So here's FTMO, right? The requirements here require that you trade a minimum of 10 trading days. This means that you have to take at least one trade for 10 days. So you have 30 days to trade. Within those 30 days, you have to execute at least one trade for 10 days. So like, say, for example, you pass your FTMO on the very first day, right? You make your 1,000 on that very first day. If you do that, great. For the next days, just open and close a 0.01, like a penny trade, so that you can count that day. So you just need 10 minimum trading days. This just shows that you didn't just get lucky, even though you technically did kind of get lucky on the first day. You just want to show them that you're still somewhat consistent. They don't care how much profit you make as long as you at least trade on those days. Because what they're looking for here is they just want to make sure that they don't have people who are just getting lucky, right? They want people who are consistent, who can consistently bring in profit. Similar to like what I do, right? I profit every single day almost because I'm very consistent with my trades and I trade every single day. So that's what they mean by the 10 days. So you just got to trade 10 days. So say, for example, you started today on Tuesday. You take one trade today, that's one day. You take one trade tomorrow, that's 2 days. You take one trade on Thursday, that's 3 trades. You take one trade on Friday, that's 4 trades. It's the weekend, right? Although it's the weekend, you can still trade on the weekend. You can trade Bitcoin. You just open and close a Bitcoin. So you trade open, close one Bitcoin on Saturday. That's going to be the 5th day. You just count that up until it becomes 10 days. And then that's going to fulfill the requirement. So Let me see if there's any other questions regarding that iPhone, just let me know. But it's pretty self-explanatory, right? You just have to trade for 10 days out of that whole period there. Let's see if there's anything else here that I missed. I think that's it. So yeah, iPhone, if there's any other questions regarding that, just go ahead and pop in the chat. But other than that, I think that's pretty much it. Barack said, so Saturday is counted if we can get an asset trade. Yeah, it's just you just got to trade crypto because crypto's open on the weekends. I mean, you don't have to. Like, you have 30 days. So if you're trading every day with us on the live, those 10 days are gonna count within those 30 days. iPhone said my start end date is April 6th to May 5th. Yeah, no, that's fine. Your start to end date works. I mean, you just got to take 10 trades. So what you can do is you can pull up your metrics, and then you can see how many days you have. But I mean, if you're trading every single day, you know, you should have no problem with hitting 10 days, because we're trading every day for like 4 weeks, which is how long your challenge is going for. You're going to hit 10 days. Like, that should be the least of your worries, to hit the 10 days. But I mean, if you really wanted to hurry up and get it over with, then you could trade on the weekend, but there's really no hurry, right? Odds are you're probably not going to pass your challenge within 1 day unless you get really lucky. Because the thing is, I try to teach you guys proper risk management. So like with my trades over here, right? Let me show you real quick. So today I locked in 2,000, right? So if you do the math here, I have a 200K account. So 2,000 divided by 200,000, right? I only made 1%, guys. You see that? I'm teaching you guys to make 1 to 3% a day. So like, if you need 10% to pass your challenge, you're probably going to trade 10 days, right, to make it to that point. Or maybe you'll trade less. You'll trade, like, if you're doing 2% a day, right? 2 divided by 10, that's going to be 5 days. Or sorry, 10 divided by 2. That's 5 days. Once you're done and you pass your challenge, you'll have 25 more days to get your 10 days in. So I think that should be the least of your worries, guys. I know there's a confusion there for some people, but for the most part, your 10-day minimum should be like the least of your worries. Your most important worry would be to not reach your daily loss, not to reach your max loss, and to reach your profit goal. But main goal is to just not reach your daily loss or your max loss. Because the thing is, if you don't reach your profit goal by the end of the month, you get a free retry, you know? So there's no rush to it. Just take your time, and you know, your main goal is to pass. That's the main goal. I can't stress that enough. I feel like so many people try to pass FTMO within like 2 days, but then they end up failing because they just overdo it. They over leverage, they over trade. It's just too much for their account to handle. So yeah, hopefully that helps, iPhone. Yeah, Brock, exactly. No need to hurry. Other than that, let me scroll up real quick. So next question is from, oh, thanks. You guys already answered Angela's question, so thanks for doing that, guys. All right, Stanley, finally to your question. Sorry it took so long too, but I'll go over the V3, basically all the variation strategies right here real quick. Give me 1 second, guys. Let me just go refill my water bottle real quick. It's empty. All right, guys, back. Let's see. So Stanley, we're gonna go over the variation strategies. I know that this is all new to you because you've been gone for a while, um, but they're not too difficult. They're really, really simple. So let me just take the pivots off. I'll start off with the V1. So the V1's probably the easiest one of them out of them all. I'll show you one example right here for the double wick, and I'll show you another example for the double body. And I think you'll like these strategies a lot, Stanley, because I know you like to get in and out of these trades really quickly. And this is pretty much what we've been applying during the live. And just a reminder, guys, so a lot of people keep asking me, um, they keep asking me if the other strategies work. The other strategies work fine. The only reason I apply these scalping strategies during the live is because we only have a set amount of time on the live, guys. We were on the live for an hour and a half. I can't show you guys intraday trades on the live because we don't have enough time to look for an intraday entry on the live. And most of the time it takes like time for them to actually develop and set up. So that's the main reason why we don't apply those during the live. It's just, it's due to the time constraint. So all the strategies on the course still work perfectly fine. It's just we're scalping because this is what works for the live. And this is just the way I like trading. So I like to know if I win or lose the trade right away, which is usually going to be a win. But back to the strategy over here. Here's the V1 variation. These strategies are still, well, I mean, they're no longer in testing phase because we've been applying them for a couple months now, but they were only created a few months ago. This is why the videos aren't up yet, because they were still testing. I am creating the actual official videos for these. I've been working on them for the past couple of weeks now. They should probably be up within the next week or so. So hopefully they'll be up by then. But I'll just go over them real quickly. They're not that difficult, Stanley, so you should be able to find them. And I'll send you the requirements as well over here. Or what you can do is you can always go back to this live session, Stanley, and then just pause it and then write down these requirements. Unless you want to do them right now, it's really up to you. However you want to do it. But anyways, let's get started. For the V1 over here, your first requirement is to confirm the overall bias. I'm not sure if you were around when we were using bias, Stanley. I know you were kind of in and out for a while, but this here, you just want to confirm the direction of price, right? So to confirm that, you want to look at retail sentiment. Basically, this is retail sentiment right here. For the people who don't know what retail sentiment is, it basically tells you where all of the retail traders are trading. So refreshing this right here, you guys can see that it says 60%, 64% net short, right? This means that 64% of retail traders in the market are selling right now. This right here, net long 36%, means that 36% of traders are buying right now, right? Basically, you want to use this to identify where you want to trade. If everyone's selling, you want to do the opposite, right? Because the majority of people lose at trading. You don't want to do what everybody else is doing. You want to do what the minority are doing. So if this says that it's 64% short, I'm going to be looking for some buys here. Looking over at the fundamentals, this right here, you want this number to either be above 100 points or below 100 points. You can see right here during the morning, it was up 499 points. So if this is telling you to buy, and this is telling you to buy, and then you go to over to the chart, and this is telling you to buy, there's different ways to identify whether you're looking for a bullish or bearish technical bias. You can use a trend meter. Right here, the trend meter is green, right? So you're looking for a buy. You can use the pivots. Price is above the pivots, so you're looking for a buy here. Bias is going to be for a buy. Your retail sentiment is telling you to buy. Fundamentals are telling you to buy. And technicals are telling you to buy. So what are you going to do? You're going to buy. With that said, you're going to confirm this. We're just going to assume that it's a buy. You can't confirm it right now because the market is closed, but we're just going to assume that it was bullish. So with it being bullish right there, you're going to be looking for buys. The next step is you're going to use the K2 high-low indicator to identify where the high lows are. So for example, right here, we have a low, we have a high right there. And thanks, Alexander, for showing me that. I forgot how to use that tool. Now that we have this set up right here, you see that this is a low and this is the high. once you've confirmed it, you just want to confirm that the following candle, like the candle following the low right here, is either a double wick or a body rejection. So right here, there's no double wick. I'll show you an example for that later on the next one. But right here, you can see either a double wick where there's two wicks rejecting off this low, or you want to see that there's a double body rejection. So like, for example, right here, these two bodies are on the same level right there, right? So there's no double wick, but there is a double body. With that said, you just want to confirm that there's a pending momentum in the direction of the trade. So right here, we got a sell signal. The next signal is going to be a buy signal, right? So you're taking a buy here. You want to make sure that a buy signal is coming. Once you confirm those, you can enter right here for a long. There's a fixed TP stop loss right here, 400 pips. It just depends on how you want to do it. Sometimes you can set it to the previous swing here, but this is too tight. Just a reminder, we're in Asia session, so market isn't moving at all. So we'll just set it to the default 30 to 100. You let this run right here, and there you go, full TP. So that's an example of a V1. Let me see if I could find a better one over here where there was actual movement, because the thing is market's closed right now. So this isn't, where it's not technically closed, it's Asia. So the volatility is super low. Let me see if I can find another one over here. Let me see if there's this is an entry right here, but it's also too small. But if you were to take the sell right here, this would have been a full TP right there as well for 100 pips. You go farther back. All right, let's see. There's no pending signal there, so no entry. All right, here's one right here. I think this is a good one. No. This is going to be an example for another strategy, a V3. But let me see if I can find one over here. Okay, so here's an entry right here. Again, this isn't like a good one because it's kind of small, like the TP stop loss is kind of tight. But this is an example of the double wick. So again, right here, we're going to assume the bias right here is for a buy. We can't check right now because market's closed. But with this right here, we're going to say this is a buy. Overall bias is a buy. Second, you want to confirm the high low. The low's right there. Third, you want to confirm that there's a double wick rejection or a double body. So right here, we have two wicks rejecting off the low, right? The low is right there. This one's right off it. So double wick. With that said, you'd enter a buy position right here. You can use the default 1030 split. There's a V1 right there, double wick. You let it run and full TP off the next candle. Oh, sorry, my bad. This isn't actually an entry because there's no pending signal there. So sorry guys, I take that back. Let me go over here real quick. Okay, here's another one right here. So actually, I don't think the bias here was for a sell, but I mean, we can just use this as an example. So let me go back real quick. Not that this was the bias because we can't tell. We're just going to assume. So overall bias, we're going to assume that this is a sell. Actually, my bad, guys. I'm mixing up the V3 with the V1. Okay, one right here. Does this actually go up? Okay, here's an example right here. Same thing that we were looking at, but now we have all the requirements met here. So let me just take this again step by step. We're going to assume that the bias here was bullish. We can't check right now, but we're just going to assume. The second requirement, we're going to confirm the high low right here. This is the low and this is the high. Third, you want to confirm that there's a double wick rejection or double body rejection. Right here, there's a double wick rejection off this low, a wick bouncing off this low, and this wick bouncing off it exactly as well. The fourth requirement, you want to confirm that there's a pending momentum in the direction of the trade. Right here, we have a sell signal, so the next signal is going to be a buy signal, right? With that said, you'd enter here with a long position. TP stop loss is going to be 1030. You let that run, and there you go, full TP off the next candle right there. So I'm just using this as an example, guys. I don't want you guys to just take every single trade. You have to make sure that the requirements are met. But I'm just showing you like how this specific strategy works. So Stanley, does that make sense for the V1? If there's still confusion there, just let me know. Because I did show you an example for the body, and I showed you an example for the double wick. But if you're still confused, just let me know, and I'll try to find another example for you here. Okay, perfect. Yeah, great. I'm glad you got it right away, because some people get confused with the double wick or double body, but I'm sure you get it. All right, so that's a version 1. The version 2 is, it's basically the same thing. You're just looking for something instead of a double wick or a double body. You're just looking for a strong candle. So let me see if I could find one over here so I can show you. Let's see. This is during Asia, so it's kind of slow. But I think it still works. All right, so again, right here, it's basically the same thing. You're going to identify, I didn't put the other requirement here. Let me just add that to here too. I got to update these because I don't have the first requirement there. There we go. Just this one. So as we go along, I'll keep updating these. So this is like, it's literally like the same thing. It's just, there's just one difference to the requirements. So K2, 1 minute variation, K2, K2. Okay, so you're basically looking for the same thing here. Overall bias, we're going to assume that the bias here is a sell. I know there's no way for us to really tell because the market is closed, but we're going to assume it's a sell, right? So we're just like, okay, the bias right now is a sell. So we're looking for a sell. You're going to do the same thing we did before. Look for the high and look for the low. So we got a high here, and then we got a low right here. Third requirement, you want to confirm that the high is a green candle and the low is a sell candle. The high is a green candle and the low is a red candle. Right here, the high is a green candle. So we're going to be using this right here. The high is a green candle right here, and you want to confirm that the following candle is a strong opposite candle. So for example, here you're basically identifying price hitting like a resistance, right? So price kind of hits this point, and then you're expecting it to come right back down because it's confirmed with a strong candle right after. You got the high setup right here, and then you got a strong red candle right here. So this is going to kind of give you a hint like, hey, price is probably going to push down a little bit. So you can probably catch a quick little scalp right there. So first requirement, overall sell bias. Second requirement, you confirm the high right here. Third requirement, you confirm that the high is a green candle. Fourth requirement, you want to confirm that the following candle is a strong opposite candle. So since we have a green candle right here, the opposite is going to be a red candle, and it's a strong red one. With that said, you want to confirm that there's a pending momentum. The most recent signal right here is a buy. So the next one's going to be a sell. That's going to give you the confidence that, okay, if you're looking for a sell here, say if you get a sell signal that comes up and it just spikes this way, right? It's going to go straight to your TP. So that's what you're looking for. You're looking for those quick little pushes. With that said, you enter a sell position right here. You do the same thing at 1030 split. The reason why we have the split here is to cover the spread and to have cushion, right? The spread's usually 110 pips. Right now, it's even wider because it's Asia session. But typically during New York, it's about 110 pips. So like if you were to enter a trade during Asia or during US, this is how much you need to cover spread. So for example, if your stop loss was this close, if your stop loss was, I can't even drag it. Okay, so if your stop loss was too close and this is your spread, look how much you can pull back. Like if price pulls back this much, you're gonna get stopped out already, right? A lot of people don't understand the reasoning behind this negative risk reward. It's not because we want a big stop loss, it's because we need to cover the spread. And this is during New York, right? If you're during Asia, it's usually like 240. It's this wide. So if you enter a trade right here, you're already going to be in the negative so far back. So if it pushes back just a little bit, you're going to get stopped out. So hopefully that makes some sense to you guys why we have a wider stop loss. It's not because you want to have a huge stop loss. It's because we're covering the spread because the spread's so wide during Asia, especially during New York. It's, you know, price is moving so fast. You got to have some sort of cushion there. So again, right here, Stanley, I'll go over the requirements one more time. Overall bias is a sell. Second, we confirm the high right here. Third, we confirm that the high candle is a green. Fourth, we confirm that the following candle is an opposite strong candle in the opposite direction. So strong red candle right here. Lastly, you confirm that there's a momentum that's pending in this direction. With that said, you enter a sell, you let it run. And there you go. There's that momentum that we were looking for. And there you go, full TP off that. I wouldn't take this trade here because this is during Asia. You know, as I mentioned before, if you guys want to trade during Asia, you got to go for a smaller TP, like maybe half. That would hit right there. So, but I recommend you guys just don't trade during Asia. Just keep it during New York session, even London session. But Asia is like, this is like the worst session to trade in. So there goes an example of the V2. So as you can see, it's really simple. The only difference you're changing here is whether you're looking for a strong candle or whether you're looking for a double wick or double body. That's for the first two variations. The third variation is probably the easiest one out of them all. And it's probably the one that works the best because you'll see it lines up with like the V2. So I can use the same exact example right here for the V3. The difference for the V3 is you just don't look for a strong candle. You're just looking for any red candle. So this is even easier because, like, for example, here you're looking for a strong red candle. You could just ignore the strong red candle. It could be any red candle. It could be a weak red candle. It could be a strong red candle. It could be a neutral red candle, just whatever candle. So this here would actually be another entry for the V2 and the V3. The V3 right here is literally the same thing. So you identify the high low. Let me go back over here again. And I'll show you another example after this. This is just, I just want to show you that it lines up like almost exactly with the V2. You identify the high low. For buys, you look for a low with the red candle. For sells, you look for a high with the green candle. Right here's a high with the green candle. The following candle needs to be opposite, and it can have a signal on it. It's just opposite, doesn't need to be strong. Same thing right there, same situation. You have a pending momentum for a sell. Confirm the sentiment. We're going to assume that it's a sell. And then for this right here, the only difference is where your TP stop loss is. So like from before, we had it set to a a fixed TP 1030, right? For this one right here, you technically want it to be a minimum of 300 pips. So it just wouldn't really matter. You'd still be going for that. Or you can use I'll just edit it right here so that you guys can have that ready. And I'm going to adjust this too. So I'm going to put this to the top so that everything kind of lines up. I'm going to make a couple edits here. So 1, 2, 3, 4, 5, and 6. 7. So set. Or I'm going to put this here, minimum stop loss of 300 pips on 1 minute. Okay, because this applies to pretty much everything. So yeah, for right here, you want a minimum of 300 pips for the 1 minute 500 pips on the higher time frames. So like, for example, here, you don't have 300 pip stop loss. So you wouldn't have taken this trade here. This would have just been skipped. You would have just skipped it. But if you wanted to take it, you would have taken the V2. Let me go back into the earlier time of the trading session, because you'll find better entries here. So let me see if I can find one. You wouldn't take, there's an entry right here, but you wouldn't take it because it's right at the sessions. I know that you haven't been around for a while, Stanley. So basically these sessions right here, you don't want to trade around these areas. If price is too close, you want to avoid trades that are cutting through it. But if they're pushing away from it, then they're okay. So let me go over here real quick, see if this could be an entry that we could use for an example. Just want to make sure it's at least 300 pips. No, it's too small. So this wouldn't be an entry for a V3. Let's see. The market's been kind of choppy lately, so it's kind of harder to find these V3s because getting that minimum 300 pips is kind of difficult. Let me see if I can find one here. All right, maybe this one. It's close, but, and the thing is, you can apply these on different time frames, so it doesn't have to be on the 1 minute. Let's see if I can find one here. No, nothing there, nothing there. I gotta see where the market's actually kind of, where it's moving enough to catch it where it's actually pushing. Yeah, there's nothing here, huh? All right, let me go back. This is during London session. For this strategy specifically, I usually apply this on the I apply this on the 10 minute because there's more space, and I think that might be a better example. Let me just put this over here real quick. Let's see, 1 minute variation. If we don't find one here, I'll just show you on a different time frame because I don't think we're going to find one on the 1 minute where there's actual. All right, hopefully this one right here is 300 pips. Yeah, not even close. Let's see. All right, come on, maybe this one. Nope. This is during Asia session, so we're probably not going to find anything here. Let me go back over here to. All right, this is going to be. Let's see this real quick. Nope. All right, maybe this one. All right, so this is close. I'm not like you probably wouldn't take this trade here, but I'm just going to use this as an example because I just want to show you. As you can see, the market doesn't really move as fast on the 1 minute, or it hasn't been. So it's kind of hard to find these entries here, but I'm just going to use this to show you. Actually, it doesn't even fit because it's my bad. All right, let's just go on the 10 minute because we're not going to find one on here. Let's go to the 10 minute over here real quick. See if I can find one. High lows. Turn off the pivots. I swear we had one this morning. So we did have one here, but it was on open and it was for a smaller move. It didn't fit the requirement. KC limit variation. I gotta refresh this. 1 second, I gotta refresh it so I have the text on there. All right, V3. Let's see if I could find one here. Oh, perfect. Okay, it's right here. I didn't notice this one. All right, so here's an example of a V3. Basically, you're confirming the direction of bias. We're going to assume that the bias here was the sell. We can't tell because the market's closed, but we're going to assume that it was a sell, right? So we're going to say that bias was a sell. You're going to confirm the high low. So we got a high right here. Third, you want to confirm that you're looking for a green candle for sells, a red candle for buys. Right here, we have a green candle for a high. So we're going to look for a sell at this point because our bias here is a sell. The following candle needs to be opposite. So right here is a high with a green candle. The opposite's a red candle. So we're basically looking for price to come up, bounce off this high, and push down to our TP real quick. Once we have that met, we just want to confirm that there's a pending momentum in the direction. So for example, here we have a, right here we have a buy signal. The next signal is going to be a sell signal. So with that said, you'll enter this for a sell. You can see here that the requirement for the stop loss is to set stop loss at the high low. So for example, the high low is right here at 72 points, which is 720 pips. You can round it down if you want, or you can leave it at 700 or 720, it's just up to you. I'll just leave it at 700 to just balance it out. With that said, you enter the sell, you let it run. And actually, wait, I remember this. This is from today. So actually, we wouldn't have taken this trade here because today we were looking for buys only. As you can see from our profits this morning, we only took buys. So sorry, I just gotta, I only know this because we only took buys today. So we actually did take this sell right here. Because I was like, why did this lose? Because we didn't take sells at this point. The bias was for a sell. I mean, for a buy. So we were only looking for buys here. This is a bad example. Let me go to the next one right here, which is right next to it. Because this is today from the 19th. And yeah, these are the profits from the 19th today. We only took buys because the overall bias was a buy today. The bias was just really strong for a buy. And you can tell right here that it's still there. So the bias right here, you can see that there's 64% of traders who are on the short side. So we're definitely not looking for sells. We're looking for the opposite bias. There's actually another example that's right here that's right on point. So we'll go to this one right here. Same thing. We're going to go and identify this as the low. And same requirements. We confirm the bias, which is bullish. We confirm the low here, which is the this red candle right here. We want to confirm that the following candle is opposite. We have a low with the red candle, opposite green candle right here. We have a pending momentum for a buy because the previous signal here is a sell. You'd enter this for a long position right there. You set your stop loss at the previous swing, which would be right here. I know it's kind of small. You want a minimum of 500 pips on the higher time frame, so you'll just push it out a little further out. If it's really close like that, where it's only off by like maybe 4 or 5 points, you guys can just cover the difference right there. With that said, you let it run, and you can see right there that it hits TP. So this is always going to be key, guys, the bias, right? So you can see, for example, here, if you didn't look at the bias and you took the sell, you would have lost the trade. But if you would have looked for the bias and waited for a buy here, this would have pushed in your direction. You would have won the trade. So this is pretty much it for the variation strategy, Stanley. If you have any other questions regarding any of these, just let me know and I can clarify. But I think for the most part, it's pretty much self-explanatory. If you want to go back and take a screenshot or write down the requirements for these strategies, you can do that. Otherwise, I'm going to be making official videos for these strategies within this week and next week. So hopefully it'll be done within the next couple weeks or so. All right, Stanley, perfect. And if you want to see other examples, just go back to the previous mentoring sessions. I think we covered this almost every mentoring session because everyone asked for it. And that just gives me more motivation to finish the actual videos. Other than that, let me see if there's anything else here that I'm needing to cover. Solo said, hi, I got another question in regards to the V3 and high-low. If the high-low is a bull or opposite green, the falling candle is a bear red. However, trying to figure out. Sorry, let me reread your question, Solo. So for the V3 and high-low, if the high-low is a, So if there's a new high low, solo, it resets the that resets the entry, right? Because the thing is, your trade's based off the high. So basically what you were saying here was like, let me see if this was a low right here. No, it wasn't. Because the thing is, if there's a new low that's next to it, this low is going to be invalidated. So you can't use that as an entry anymore. You have to use the one that's recent, right? So like, for example, you have a low here, but if this becomes a low, then this is not going to be valid because you're not looking at this one, you're looking at this one, if that makes sense, Solo. I think that's what your question is asking, right? Because you're asking, yeah, you're asking if because it's gonna switch up the requirements there. Well, not the requirements, but the conditions for what you're looking for. All right, Solo, cool. So let me scroll up real quick, see if there's any other questions for me to cover. Yeah, no problem. So let's see, I got Stanley's question done. Purity had the same question. So hopefully that answered your question too, Purity. I covered all the V3s right there. I mean, the V2, V1, V3. If there's any other clarification that you guys need regarding the variation, just let me know and I'll cover it. But I think for the most part, we covered them pretty detailed right there for each variation. Let's see if there's anything else here. Perfect, no problem, Purity. Let me scroll up to see if there's any other questions here. Victor is asking, how do you manage all those accounts you have? I use a copier. It's called Social Trader Tools. So if you want to use it, this is the website, socialtradertools.com. If you want to see how it's set up, just go on the YouTube channel. Go on YouTube and you can find videos of that. I would show you guys mine, but there's a lot of scammers online that try to steal your account number. So I'm not going to do that, fortunately. But let me see if I can find one here. Okay, so if you just look on YouTube, there's a bunch of videos here how to set it up. Just look up Social Trader Tools, and they'll tell you exactly how to set up your copier and stuff like that. It's not that difficult. You just put in your login info, and then you'll copy over your trades to those accounts. And that's pretty much how I take my trades. Like, for example, here, I think I sent you my profits for this week so far, Victor. So like, for example, this top one is going to be my main account. Whenever my account up here takes trades, these accounts right here will just copy it exactly. So if I take a buy on here, these accounts will take a buy as well. If I take a sell on here, these will take a sell. It literally just copies the move over. So it's pretty simple. Once you set it up, it's pretty much streamlined. The trades will copy. It's just initially setting it up. That's going to be the issue. So other than that, I think that's about it. Let me see if there's anything else here. Oh, nice. Yeah, Maddie said he's looking up different zones. Yeah, it's online, Brock. You don't have to install anything. It's on the website. It's on a VPS, like a virtual server. So you just set up your account and then it just copies it over to your other accounts. So it's all online. You don't have to install anything. It's pretty simple. You just put your account on there and then set up the copier, and it should have everything copied over from that point. Let me scroll down a little bit. I think that might be it. Scroll down a little bit, see if there's any other questions. Yeah, I think that might be it. See, Barack said I have many gray areas regarding the mid-market reversal, but I don't even know what questions to ask as I haven't gone deeper into it. Yeah, Brock, if you have questions regarding that, like they'd have to be really specific, right? Because it's such a broad topic um, when covering the mid-market reversal. So I mean, we're gonna have these group mentoring sessions every week, so it's not uh, like you're never gonna get your question answered. So yeah, probably next mentoring session, if you want to have more specific questions, like just to get your mind going, like if you're wondering which direction to trade, you want to trade in the direction of bias, or if you're confused with what time it happens, it's from like 9 to 10, uh, just like things like that. Like if you have a specific question, because the thing is, we go on with the mid market reversal like all day, but it'd probably be better if you just have a specific question so that you can actually understand what you're confused with. So yeah, next week will be fine. Stanley said, which method are you using most often for the live session? All of them. So I use all of the 1 minute strategies, basically all the variations, the high lows, triple confluence, pivot, not really the pivot scalp, mostly the variations. So basically whatever variation comes up, that's what I would be using, Stanley. So like I showed you earlier, the V1, the V2 and the V3 will line up sometimes. Like I forgot which one I showed you earlier, but if they line up, then that gives me a better confirmation that the trade will run. I usually like looking for an entry on the 10-minute. So say, for example, we have this running right here. Say we had this trade running right here, right on the 10-minute. This happened at about 11:30. What I would do is like around 11 o'clock myself over here, if I saw any entries here at 11, like for example, any buys, I would take them within that trade. So if I see something here, like a V3 running on 10-minute, then I would take whatever variations in that direction on the shorter time frames. So there's no specific variation that I use. I use all of them. There's also the high-low scalp strategy. So I don't think I covered that with you. I'll show you real quick how that works. Actually, this isn't one that we use too often, but it does come up. It's just I overlook it sometimes because I'm looking for a variation. But here's an example of the high-low scalp. And this is one that we did see today, but I saw, but I missed because I wasn't paying attention. So basically, you want to confirm the previous swing high and swing low. So right here we have a high. You just want to confirm that 5 candles pass after it to actually confirm that this is a high, to establish it. So there's a high right here. There's 1, 2, 3, 4, 5, 6, 7, 8 candles that pass it. So this is established as a high. You want to confirm that price breaks and closes past the previous swing. So like, for example, right here, this next candle breaks and closes past it, right? So with that said, you want to confirm that you're trading in the direction of momentum. Right here, you just want to look back to see where momentum is pushing. You have a buy signal right here, and you have price breaking structure. With that said, that's going to be requirement number 3. For the 4th requirement, you want to confirm that price is not ranging or consolidating. You'll confirm that by drawing the low here. So as you can see at this point, price was consolidating before broke and close past, right? So price was going sideways right here. But as soon as price broke and closed past it right here on this candle, it's no longer in consolidation, right? So the 4th requirement's met. The last requirement is you just want to confirm that price has not touched this high before. So you look back over here, none of these candles have touched it, right? Fits all the requirements. Then you enter on the open of the falling candle. For the same thing that we've been applying for all the 1 minute entries here. This is going to be the K2 1 minute scalp. So again, right here, you enter this for 100 pips. And then you would let that run right there, full TP. So you can see that a lot of these strategies still line up together. It's similar to the V3, similar to the V1. You're just looking for a small little difference in the strategy. So for this one right here, this is one that I would apply. The V1, V2, V3 are all that I apply. There's a triple confluence strategy that we apply too, but that doesn't really come up very often. It's yeah, they're all really easy, Stanley, and you get in like real quick. Like you get in like like right there, the one that I showed you. you're in this trade for like 1 minute, like for 2 minutes maybe. So you enter the trade right here, it closes, you enter that buy, and you set your TP right there, and then you just let it hit. Like you set your TP there. I don't know if you know about the DOM tool. It's called depth of market. This is one that you want to learn as well. I can't show you because I can't pull this thing over to my side. But if you just go over here to the search bar on YouTube, just search up depth of market MT4. This will show you how to set up this tool. Basically, this tool right here, it'll look like this. Okay, so this is what the tool looks like. Basically, you set your stop loss here and TP right here and your lot size in the middle. When you hit buy, it's gonna enter a market order and it'll automatically set your TP stop loss. So like once you enter a trade here for a buy, your TP is already set, so you don't have to do anything. You just enter the trade, it goes up to your TP, pulls you out, and you're done. That's how I took my trades here. That's like basically how I locked in all these profits here. See how they're like right on point? They're like, they hit the TP. Here's the my main account. You can see how it has a green strip right there because it hit TP. I just use that DOM tool. I enter the trade, it hits my TP. I don't have to do anything. And then it pulls me out right there. So you don't got to worry about, because I know your problem before was getting out of the trade, right? You know, you've been with K2 for a while, for like years now. And I remember that your issue was really exiting the trade. You get greedy or you forget about your trade and you get frustrated, right? One way to fix that is you use the DOM tool. You just enter the trade and it pulls you out. So you don't have to stress about forgetting about the trade, getting too greedy, not pulling out. Cause you know, I know what were your issues back then. Cause you know, you're one of like the early members of K2. So you've been with us, you've been with me for like, you know, years now. And I know that was your problem. So I think this DOM tool is going to make it's a game changer for you. So go into search that up depth market, and this will take away all of your greed. Like, because you can't do anything once your TP is set. I mean, all you can do is collect profits. You know, you're not going to get anxious and stressed out about being stuck in the trade. So I think this will help you a lot, because I think that was one of your biggest problems before. Because I remember you'd get mad in the group in the chat, and you know it was all games, but it was all funny. But I know that was one of your problems, because you get mad because you knew that you were supposed to pull out of the trade, but you didn't because you were just getting too greedy. This will take the greed out of it because it'll pull you out automatically. So, yeah, I think that's about it. Other than that, I think that's pretty much it. Purity's asking, that's what you set up on Meta 4. Yeah, you can search this up too, Purity. So just go to YouTube, search up depth of market MT4, and then a bunch of videos will come up here showing you how to set it up. It's not really that difficult. It's super simple. Once you set it up, you just right click on your chart. So if you have MT4 open, I can't show you here because I can't drag it over, but it's on one of my monitors here. If you right click on the chart, depth of market will pull up. And then when that pulls up, it's going to pull up this little pop-up right here. This, oh, he's doing it right here. So he's dragging this thing around, and then he has the depth market open right there. So he right click on the chart, see depth market right there. He clicks on that. And then once he clicks on it, this thing comes up. So you set your stop loss right here, your TP right here, and your lot size in the middle. So you hit buy, your TP is automatically going to be set. You hit sell, your TP is automatically going to be set. So once you take that, you know, you just, all you can do is collect your profits at that point. You don't have to worry about it, and it just automatically sets it up for you. So if you guys need help with that, there's a ton of YouTube videos out there. Just go to YouTube, search depth of market MT4, and a bunch of these videos will show up here. Stanley said she just learned about that recently. Yeah, no, I mean, I kind of recently. I think like a couple months ago, Sisuk actually brought it up. If you remember Sisuk in the group, he's the one that actually brought it up, because I mean, you guys have seen Sisuk before, his profits. This dude takes like freaking 100 trades, and I'm like, bro, how do you take 100 trades and hit profit on all of them? It's like, you know, where's his profits from yesterday? because he stacks positions. Like he, okay, so look at CC right here. This dude takes like 100 trades, but they all hit TP, right? And they're all set because he has him set at his DOM. He just enters and then he just lets him hit TP. That's how he logs in his profit. So Sisuk's actually the one that showed it to me. I had no idea that this was even a tool, but now that we've had it, that's how I've been super consistent, because I don't have to go and put it in a TP. Because I know you would get mad because you were like, I remember you would get so mad, Stanley. You get so pissed because you would have to go and put in the TP and stop loss. And I know it was hard because we're scalping. You don't have time to put in your TP stop loss. And you would get caught. Like everyone would be out in profit and you'd be so mad. You'd be like, damn, why is it like, why am I the only one losing? And you thought like the whole market was against you. But the only thing was that you weren't able to get out at the proper time. So this will help you a lot, Stan. I think this will be game changer for you, so that you for sure get out and you have like no problem getting out, because you don't have to actually type anything in. It's all preset. So I think you're good, man. I think you should play around with it. Maybe open a demo account first to actually, figure out how to use it. And then once you like, it makes sense to you, start using it on your actual account, but you'll be good. I think this will definitely help you with your productivity and your trade psychology. All right. So other than that, let's see. Marlon's asking, hey, Sean, can I move my stop loss in TP? So you can't move it in the DOM, but here, let me see if there's a video here. Like, I wish I could just show you guys, but I can't show you guys on the thing because whenever I move my MT4 to another screen, it just ends up not working. Let me see if I could find a video here where they actually. Okay, perfect. This is right here. So this is how you would adjust your TP stop loss. All right, so let me see when he enters a trade. Okay, so for example, right here, where this dude has like, see, this guy's trading like C6. He has like 100 entries right here, or where he has him just sitting right there. Okay, let me see if I could get one where it's kind of zoomed in. Okay, so all right, so whenever you enter a trade, this is what it's gonna look like. I wish you had like a full screen here. Okay, here, this might be better. That's all. This chart's all messed up. Okay, so right here, basically, when you enter the trade with the DOM, you're gonna have your TP right here and your stop loss right here, right? What you can do is after you enter the trade, you could drag these lines. So if this is your stop loss and you're in for a sell, you could drag this in profit and then just drop it in profit. That's how you would adjust your TP stop loss. This is how you adjust your stop loss, and then you just move your TP, do the same thing. That's how you adjust your TP. So stop loss, you just drag it down, move it in profit, and then same with your TP. You just click on that green line and you drag it lower, and that's how you would adjust it. So like sometimes when I tell you guys like, hey, I'm gonna move my stop loss in profit and I'm gonna let it run. Sometimes I'll just delete this right here. Like I'll delete my TP so I have no TP, and I just keep dragging my stop loss lower and lower, right? That's what I would do. So if you guys remember my profits, I was trying to show you guys my profits from like, whenever you guys see me make like really big profits, like more than like 5,000, because I remember I had a couple where I made like 10,000 on like one trade. It's because I just moved my stop loss deeper down. I'm trying to see, it was like one of my profits were like where the strip was red. Just don't know where it's at. It was a long time. I don't usually do that, but if I know the trade's for sure going to keep pushing, then I'll just let it run. But I rarely do that because that's where you just get greedy, right? Because that's where the greed comes in. I don't think I have any myself, but I know some people here. So let me just show you February 14th. Oh, thanks, CT man. You're a lifesaver, bro. There we go. Oh, no, it wasn't that one. 16. There we go. So here, February 14th, look how my profits, see how I lock in 12,000 right here? Because I let it run to TP. I mean, not to TP, to stop loss. So like price would just keep dropping and I would just keep moving my stop loss lower and lower and lower. And normally I'd make like 1,000, 2,000, 3,000, 5,000. I just let this keep running and I just kept dragging my stop loss lower and lower. And that's how I locked in, this much profit. Typically it's not this high because I'm using, I'm only going for a smaller move, but in some instances I let it run longer and this is how I get it. And big, huge thanks to CT. I was looking for that for for forever. And yeah, I mean that was a crazy profit day because that was like the most profit I made in a day. Yeah, because that day it was such a crazy like if you added all those profits up on the 14th, yeah, like that day was, let's see. And this is like a single day of profits, like 369 plus 12,300 plus 8600 plus 12,400 plus 12,400. So that was like 46K in like one day across all the accounts. Like that shit blew my mind when that happened. But here's the problem. I try to keep doing that. And then I ended up kind of screwing up. I ended up losing, like taking smaller trades. And actually the other day was crazy too. Oh yeah, I remember this whole week was crazy. So that day on the 14th, I locked in that much. And then the next day I did the same thing and I locked in even more. I did the same thing again the next day right here. So you can see it's a red strip because I moved my stop loss and profit. That whole week was crazy. That was NFP week. And I think I made the most profit I ever made in that week. I only took like, I think 2 trades that whole week. I took trade on Monday, that Tuesday. And we kept trading, but I think that was it. I just traded Monday, Tuesday, and Wednesday. Actually, no, I lied. I traded the whole week. So it was a pretty big profit day. So yeah, so hopefully that clears up confusion, answer your guys' question regarding moving your stop loss and profit. It's not really that difficult. It's like you just have to play around with it. Once you figure out how to do it, it's the same process every time. Yeah, so Ali said, I remember that day you were so hyped. Yeah, no, I was. Those days come every once in a while, but I prefer to be secure with my trades, right? I don't like getting lucky like that. I rather know what I'm doing and knowing my profits in and out rather than being super surprised because it doesn't happen too often. But yeah, I mean, other than that, I think that's it. If you guys have any other questions, feel free to put them in the chat right now. Otherwise, I think that'll be it for this session. We've been on this live session for about 2.5 hours. That's crazy. Time flew by because we started this mentoring session at 2 o'clock. It's now 4:30. So I've been on here I did have to stop for like 2 water breaks. So I guess it does. We were on this for a while. So yeah, if you guys have any other questions, feel free to reach out. Otherwise, I think this will be it. We'll be back here tomorrow for the next live session on Wednesday. But yeah, I think that might be it for now. If you guys have any other questions, feel free to email me or message me on Telegram. Otherwise, we'll be back for our mentoring session again next week. Let me check my calendar real quick. All right, so let's see real quick. So next week, we'll be having the mentoring session on Monday. I'll be out of town the week after that, but yeah, I'm going to Chicago next week, and I've never been to Chicago. I've been traveling a lot this year, guys, because I'm trying to make up from like COVID. So I'm traveling a lot this year. So I'll bring my laptop. I'm traveling to Chicago on Thursday, but I'll be trading with you guys live in the morning in my hotel room. So it doesn't matter, man. Traveling, we're still gonna make money trading regardless. So other than that, guys, I think that's it. So if you guys have questions, feel free to reach out. Otherwise, I will see you guys here tomorrow morning for the next live session. So see you guys, have a great rest of your night, and I'll see you guys in the morning.